1, 2, or $10 million to invest in Sydney property, don't worry, you're not alone. The best part is there are actually better investment opportunities interstate in Australia between the price ranges of 400 to 700,000, where you can get a much better bang for buck on your investment. Hey everyone, I'm AJ, Director of Handle Properties. We're Australia's most trusted interstate buyers agents, as we help clients secure investment properties that have the potential to generate life-changing equity returns, fast-tracking them and their family towards financial freedom. We've helped over 80 clients achieve a cash-on-cash return of in excess of 50% within 12 months. Watch to the very end of the video and you'll learn about how we go about getting these results for our investors by investing interstate. The first thought that you might have is, Sydney is the biggest capital city. Won't I get a much worse return investing somewhere else? The simple answer is no. But let's first look at the data to back this up. If you look at this chart now, you can see the growth of property in Australia across major capital cities over a 30-year period. There are a few observations that we can make. Firstly, prices in Sydney don't go crazy all the time. In fact, growth in Sydney is similar to other capital cities in that it happens in chunks of 5 to 10 years of accelerated. Prices in other states are actually going strong. We're at a great time in the property cycle as a Sydney-based person to invest outside of our own backyards and seriously consider interstate investment. Investing in a place that isn't your home might be a little bit scary to you. So today we're going to take you through some data factors that you can use to build the confidence in yourself to invest interstate as we do for our clients. Now, it doesn't matter where in the world you live. One fact is true, which is property is scarce or land is scarce. Now, this is why property has stood the test of time. We can't magically create new land for people to live in. Now, having known this, as a property investor, your goal is to purchase an investment property that has a good allotment of land, because over the long term, it's a land that will grow in value and generate great returns for you. Now, when you think about where do you buy this house with a good allotment of land, there are a few things for you to consider. Now, we look at the market as a simple function of supply and demand. And on the supply side, we consider a range of factors to make sure the suburb that we're purchasing in meets the requirements. The first thing we look at is development activity. Now, you might be buying in a suburb that looks brilliant, but if you see that there's another 400 brand new houses coming on that are going to be available within the next 6 to 12 months, this is going to cause a serious supply overflow within the suburb, meaning that your investment property might not grow because there's newer properties available within the suburb that may be firstly more appealing for buyers entering the market, but also on the other side, tenants might prefer to live in that newer house than the property that you've got forward. So it's actually a two-strike there. Second thing we look at is there land in and around the suburb that you're purchasing that can be turned from farmland into housing? This presents a second risk to your investment. Thirdly, we look at council approvals. Have there been approvals to rezone any properties in and around the area for more higher dense building or construction work? And the final thing we look at is stock on market. Are there considerable number of properties up for sale today, which means there is more supply than perhaps demand is there to meet it? That's a red marker because we don't want to be investing in a suburb where there's too many properties available on market. We want there to be a serious imbalance between the number of properties available supply to the number of people actually wanting to buy them, which is demand. And with that, we'll now move to the demand side of the equation. On the demand side, we look at things such as days on market. Put simply, if you put a property onto market today, how long does it actually take you to sell it? Now, in many of the stronger markets, we're seeing properties sell within 1 or 2 weeks, showing a real demand side market. The second thing we look at is, have the prices actually grown in the last 12-month period? Then we look at, are there more buyers today than they were 12 months ago? So the buying demand is actually accelerating. It's not just stabilizing or going downwards. We'll go vendor discounting. Are sellers having to discount the price, or are they getting what they want? And the final thing we'll look at is change analysis. It's all well and good to see that a market is hot at the moment, but what we want to see is it's actually hotter now than it was 12 months ago. So it gives us a good view that we're not buying too late in a cycle, and that actually we're either mid or early cycle, giving us plenty of room for upside growth potential. Now, If you've looked at all of these markers, you've got a great avenue already to find strong suburbs, but we can tighten it even further to reduce the risk. We look at a few other factors such as population growth. Are there going to be more people moving into this suburb in the future than currently living there now? Of course, if supply is constrained, there's already high demand, and you expect populations to rise, we expect prices in the suburb will actually go up. And the second thing is, when you look at population forecasts by the government, they're often used to determine where infrastructure investment needs to go as well. So it's two sides positive. The second thing we look at is income. Put simply, you can't be buying in a suburb where the average person can't afford to pay rent or perhaps to purchase a property. If you're already at that state, like how many suburbs in Sydney are, you naturally hit a ceiling beyond past prices can't really move. So we want to invest in suburbs where people are on good money, great incomes, and are easily able to afford the rent. Now, not only will that mean that there's more demand for housing, but the second side is actually they can afford to pay the rent without actually struggling to meet those repayments for you. And the final thing we look at is infrastructure investment. We want to follow the money. So is the government investing considerable amount into the suburb, whether it's a new train line, improved roads, perhaps a private investment such as Westfields? We just want investment into the area that's going to make it better tomorrow than it is today, so that more people have real incentive to live within this area. With the combination of all of these factors, we're able to pretty strongly predict areas that have strong potential for future growth. And the great thing is many of them are priced within the range of 400,000 to 700,000, making them very affordable for the majority of investors. And typically they generate returns in excess of 10%, up to 20% within 12 months. That's a massive equity growth within a short period of time. What's crazier is often it's not just the prices that are growing in these areas. Because the market is so tight, the rent within these areas are often growing around 10% a year already. And the rental yield is far, far stronger than what you expect in Sydney, which might be 2 or 3%. In many of these suburbs, you're able to get 5, 5.5, or even 6%. Now, these are the reasons why we look for interstate investment. We genuinely believe your ability to build equity quickly without straining yourself to have to make that interest payment on your mortgage with offsetting it by better rents means that you'll be much better placed, number one, build a bigger portfolio of investments, but number two, actually create more capital growth. If you're interested in taking the leap and accelerating both you and your family's property journey towards financial freedom, reach out to us today and let us show you how we can set you up to build considerable equity and a portfolio that can get you towards financial freedom.